Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, and it's July 23rd. Hope you guys having a wonderful day thus far. We have just one economic news release scheduled for today, and that is the existing home sales for the month of June. So in May, we had 5.41 million annualized, on pace for annualized home sales, existing home sales for the year, and the forecast was supposed to dip down to 5.38, and it did come in at 5.38 million. So that basically shows that it dropped 0.6% kind of season, and of course the existing home sales was a little disappointing, but it's not due to demand. It's obviously due to the tight inventories out there. But a lot of it has to do with more of we got some more tough tweets that came out from President Trump warning Iran to never threaten us, which was all caps. So take it as you may. But of course, that's kind of concerning investors because if anything escalates, Iran controls the strait that basically 40% of the oil goes through, which could dramatically increase oil prices on a global level, and thus that would be very inflationary, to a lot of places here. Well, to everybody. Also, we have some G20 finance ministers meeting in Argentina. It's not looking too positive in the sense that they're all kind of standing their ground as to trying to find some type of workaround for the trade spats that all the countries are facing, from U.S. with the EU to Canada, Mexico to China to, the U.S. has their concerns and voiced it, and they're digging in their heels that they don't really want to cave in to offset any trade that would be offset, trade imbalance to them or whatnot. So. Again, we got some more issues arising from that as well. So right now, it's not looking so positive in terms of coming up with any agreement in terms of trade agreements with our trading partners. So let's see how this is affecting the bond market. And we're getting to that point where, remember I said that the 25 and the 50-day moving average were moving in the direction, or I'm sorry, the 100-day moving average, and that we're going to be forced to squeeze. And we were way down. We even passed the 50-day moving average. We got another approximately 50 basis points to go. Well, not 50 basis points, but at least another 25 basis to go. So this is about 75 basis points right here that we could potentially drop. So what does that mean? That no point right here, if it drops the full way, would cost us 3/4 of a point. So that's almost 1 point difference in rates, and that could translate to about 3/8 of a percent in terms of in the rate on that. So again, we are working our way towards that. I have cautioned for a while now that in July we're going to probably hit that, and it looks like we're starting to see that where we could go. Rates are starting to climb back upwards again. So again, that's where we're at. If you're in there, I would definitely lock in as soon as possible. If you have any transactions going with it, if you haven't locked yet, now's the time because it's probably going to get worse than better. Okay. Here's the yields. Again, yields are pushing us even lower. So as you can see, yields are even breaking to the high side. We're at 2.96% right now. And as you can see, it broke above all those ceilings of resistance. Remember, this 25-day moving average is providing a nice floor of support. And as soon as we broke above it on Friday, it just continued roaring past even the 50-day moving average here as well. And remember, at one point we were up at the 3.10 range, so we could potentially go. We got a long ways. We can even go up there, which would push mortgage-backed securities even further, and hence raising interest rates that much more. All right, so that pretty much wraps things up. I hope you guys enjoy the rest of your day. If you guys want to get more data or more updates, just come over to Twitter. You can find me at Mike Bjork. I do post throughout the day, on updates on the markets, where they're moving and where they're trending and such. Have a great rest of your day. Thanks again for watching. Bye-bye.